Hello and welcome to another episode of the Investing with IBD Podcast. It's Justin Nielsen here, your host, and we're coming to you a little bit early this week since we're going to have the Thanksgiving holiday on Thursday, so we are coming to you live on Tuesday. We still did the live at 5 p.m. Eastern, but it is November 25th, 2025, and we have got a returning guest for you today. This is Jason Shapiro coming on, founder of Crowded Market Report and one of the featured traders of the Market Wizards. So great to have you back on the show, Jason. How you doing?
I'm well. I'm well. Thank you. How are you?
Just fine, just fine. And I think we can just jump right in because one of the things as we were doing our prep call that really interested me is a lot of the data that you rely on for your decision making was kind of absent because of the shutdown. And what do you do when you don't have the instruments to do the normal analysis that you do?
I go flat and I
Yeah.
wait. I wait
Hmm.
until I have my data. If there's certain data that you need to trade to make your decisions to decide that this is where risk reward is in your favor,
Hmm.
and that data is not available, then what can you do? You know,
Right.
just
Now, how much data do you need? Because and for those that haven't checked out Crowded Market Report, Jason does you've got YouTube videos, you've got your service where you're kind of doing analysis on all the different futures markets, and you have kind of data over a period of time. So the data will start coming again, but there's going to be a gap. So how much data do you need, and how much is okay to be missing before you can start using your instruments again?
I use the commitments of traders data extensively. It comes out weekly.
Hmm.
So I need it to be coming out weekly. I do have an algorithm that turns that weekly data into daily data,
Hmm.
um, to varying success. So it's sort of interpolated data, but certainly for the time period that this has been shut down, which is 2 months, it's not, the longer it goes, the more the error is in my interpolated data. So that's no good. So, if I missed a week or so, it wouldn't be that big of a deal. But at this point, there's nothing I can do. They're slowly releasing the old data now, and
Hmm.
it will slowly catch up and we'll be caught up. But until we are, um, there's nothing I can do.
Yeah. Okay. Well, and it's worth mentioning that this year has actually been a year of less activity for you to a large degree. So, a lot of people they have trouble sitting on their hands, right? They feel like they have to always do something. So why is it that you haven't done much this year? And how do you kind of keep yourself from just doing something when it's, I guess, just to do something? Sometimes, if the setup isn't there, you're not forcing it. But what's kind of kept you out?
So if the setup isn't there, I'm not forcing it.
Hmm.
That's the answer.
Right.
That's the answer. Quite
Uh-huh.
frankly, I have been doing this a very long time. Um, I specifically developed a process to keep me out of doing stupid things, and hopefully have a process that is providing me with positive risk reward over time.
Hmm.
I built this process and have been working on this process and have been, for God, 25 years. I didn't spend, all this time and money. I had people working for me full time that were quants doing it, and I didn't spend all this time and money, um, to not follow the process.
Right. Yeah, exactly.
All this
Uh,
time and money because the process is what gives me my returns.
hmm.
So I'm not going to not follow it now and do something stupid. It's a lot of people ask me that. I understand the difficulty that people have sitting on their hands and not doing anything.
Hmm.
Um, I don't have that difficulty.
Hmm.
Um, quite frankly, if the process says go, I go. If the process says no, I don't go. I mean,
Hmm.
the last, I would say, 2 to almost 3 years has been less trading than I had seen the previous 20 years on average.
Hmm.
but for whatever reason, I've had a higher hit rate in that time period than I had before.
Mm-hmm.
And my return stream has been right on target, if not a little bit better in the last few years than my expected return stream. So I don't really care. Um, I think as an old man that I have become, I prefer not to trade. This doesn't excite me. Trading doesn't
Mm-hmm.
excite me, you know.
Mm-hmm.
I have a job to do for my clients, which I promised them I would do when I accepted them as investors.
Mm-hmm.
And my job is to provide them with the return stream that my process indicates it will provide them with.
Mm-hmm.
So that's the job that I do.
Mm-hmm.
I don't do other things. If I feel some incredibly stupid need to do something, which I don't, but if I do, then I can go into my retirement account and I can do something stupid if that's what I feel like doing. You know?
Right. Yeah. You don't mess with the job that exactly as you said, the what the clients have hired you for.
Right.
So maybe for our listeners that aren't familiar with your style, again, you already referred to the commitments of traders, how you use that data to kind of develop your view. Maybe you could walk through just one more time on how you kind of do that. And again, I want to make sure that people realize that you're on X, you're on YouTube, you do a lot of great in-depth analysis of these charts. But just as a quick overview, so people kind of understand what it is that you're doing
I
or
mean, in
not doing.
general, I'm picking market turns.
Hmm.
I think that most people can acknowledge that market turns happen a lot at some capitulation point.
Hmm.
Um, I am measuring that capitulation by participation, meaning how many people are long, how many people are short. I'm looking for mass amounts of shorts
Hmm.
in order for me to start buying, or mass amount of longs in order for me to start to look to get short. I'm
Hmm.
fading mass participation. So where do I find mass participation? The commitments to traders, which is data that shows what people in the markets are, where they are positioned. That's what I'm using to figure out mass participation. So
Hmm.
once there is mass participation on one side, massive amount of shorts, I'm looking to go long. It doesn't get me long, but at that point, it opens up a window. I can get long, and I'm waiting for a market confirmation before I actually get long.
Yeah.
So setup, and then confirmation, and then action.
And this is a little bit of a softball question, but certainly one of the things that a lot of people have been noticing in the market lately is sentiment. How bearish sentiment has been, but certainly the commitment of traders. It's not just what people are saying; it's kind of like what they're actually doing. Do you pay attention to sentiment as well?
I do. I
Hmm.
do. Um, can be a hard read. I've been a sentiment person for a very, very long time, so I
Hmm.
have sort of my go-to sentiment thoughts. I rely more on the positioning than I do the general sentiment, but I do pay quite a bit of attention to general sentiment. I don't think that I don't really think that the sentiment data things are great out there. AAII is a sentiment thing. I don't think it's great. It
Hmm.
doesn't test great. Um, all of my I don't think or I do think is based on actual testing of data, right? What I
Hmm.
think or not think is I don't want to get involved with. I don't think because the data doesn't test well. I'm trying to look to statistics to tell me what to think or not to think. But I don't think the CNN fear greed thing has not shown me any value.
Hmm.
I don't even see that as being a sentiment indicator because if you look at it, most of the inputs into that are actually price indicators. Overbought, oversold, so those are
Hmm.
price, not sentiment. I don't
Right.
really see it as a sentiment indicator. But I do listen to a lot of things. I do read a lot of things. I listen to the people on TV to try and gauge sentiment.
Hmm.
I don't listen to people on TV to try and get ideas. I listen to try and gauge sentiment.
Hmm.
And I read a lot to try and gauge sentiment. And what I always find with sentiment is if you're questioning what it is, well, then it's not consensus. You know when sentiment is consensus
Hmm.
because you'll watch whatever CNBC or Bloomberg TV or whatever, and you'll have 10 guests come on, and 9 or 10 of them will say the same exact thing.
Right.
Um, it happens.
Uh-huh.
And then when that matches up with the positioning, which it usually will do, then we're talking about, hey, things are one-sided, and there's a good chance that there's a good risk rewarding going the other way.
Hmm. I'm going to go ahead and share a screen real quick with our market surge charts, and I'm going to throw up the Nasdaq, and maybe you could talk a little bit more about some of the market turns. I know one of the times that you came on, it was such a clear setup. I want to say it was. When when you had a news failure event, and again, this is using your term, but it was CPI. I remember it was in October, and CPI came in at the highest level that it had been like ever. Not ever, but in like years, decades. And you were looking at the fact that on that measure, the the moving averages, I mean, the indexes had really just taken off. They went down at first, but then they really started, piling in. And this was October 13th, 2022, if I'm not mistaken. So this is the day. And, it really was a great way for you to kind of recognize a market turn. You had really bad news, and it clobbered the market. But by the end of the day, it was up two and a quarter, at least for the Nasdaq, and that was the beginning of the recovery that started in 2023. Have you had any examples of that? I mean, this year we had a lot of the tariff tantrum stuff happening in February and March and April. Was there anything like that this time around?
Sure, look at that low day.
Yeah,
That
I
was on
mean,
a Monday.
hmm
The market was obviously falling because of the tariff tantrum. We
right.
had we had news over the weekend
Hmm.
that was even more negative, tariffs. The market, as you can see, made new lows, gapped down, made new lows over the course of the day,
Hmm.
and closed higher. And
Yeah.
that was the exact bottom. When the bad news that's driving the market down can no longer drive the market down, right? Then there you go, right? In particular, if everybody's bearish and everybody's short already, and then the bad news that they've been shorting on can no longer drive the market down, that's when you have a good chance that the market is going to turn. That's exactly how I do it, and that's
Hmm.
exactly what I look for. So yeah, it was right there. I can give you all examples because every trade that I do,
Hmm.
that's what it looks like. Not that
Hmm.
all of them work,
Right.
but work or not work, they all look like that.
Hmm.
People are the Clemence's trader is showing that traders are very short. I am following what the narrative is that is making them so bearish. I'm looking for news that confirms that bearishness, and then a market that refuses to go down despite that.
Hmm. So now the other element here, especially with the news cycle of the last year, is a lot of times you've gotten this news. There's been kind of uh, a few days, a few weeks, sometimes a reversal of the news. And I mean, just an example of that is recently on October 10th, where you had President Xi of China and President Trump kind of going back and forth with an increase in tariffs, rare earths, a lot of back and forth. A really ugly day on October 10th, but then it kind of ends up working itself out. But it's hard, right? Because a lot of times you get, oh, a deal is in the works, a deal is maybe coming, and so does that offer you as clear of a setup when there's a lot of back and forth of
No, it's hard, and I
yeah.
think that your earlier question of why have I had less trades during this period.
Hmm.
I can't say that I know for sure because I don't know anything for sure. But
Hmm.
if I want to sit here and give you an explanation of what I think it really comes down to exactly that. I need massively crowded markets to have
Hmm.
trades.
Hmm.
You're not going to get massively crowded markets when you have exactly what you're talking about, right? Okay, they might say this, but what do they actually mean? What do people actually believe? You know what I mean? How are people acting based on it, right? We got to the point where it became for that whole taco thing, right?
Yeah.
Sure, they all believed how bad the news was back in March and early April, but as the markets were rebounding, they stopped believing any of this stuff, right?
Hmm.
So yeah, she and Trump and all that, but no one really believes it anymore because of we know that this is kind of how Donald Trump likes to operate, right?
Hmm.
Likes to say crazy things, but then he brings them back in because it's all part of his, I guess, negotiation process, right?
Hmm.
So therefore, we're not really getting very major crowded stuff um, because of that, and therefore, I am not getting a lot of trades. It's
Yeah.
fair enough. I mean, it's sort of I like it because that means it's a sort of a self-correcting
Hmm.
process for me. So
Hmm.
that's good.
Hmm. I wanted to talk a little bit about some of the narratives. This is something that you mentioned that there were two big narratives that you kind of felt like were happening, and of course, AI. You know, everyone is talking about
Aware.
that and how impactful that can be, and you see that, of course, with the stocks and certainly the infrastructure, everything from your data centers, your chips to even the cooling of those chips, that run a little bit hotter. But then the other element is the liquidity. So, what insight do you have on the AI? We'll start with the AI thing. Of course, everyone's talking about it, but what's kind of your take on this whole AI thing and how far can it go? And are we late in this or are we early? That's the big $1 million question, I guess.
$1 trillion question.
Yes.
Yeah,
Yeah, I forgot about inflation.
right, yeah, that's right. The first thing I would say is if you're talking about, or if you're asking me, what is it going to look like in 5 years or 10 years, whatever, I will tell you this: you're talking to the wrong guy.
Hmm.
Okay, I can barely use the internet.
Hmm.
So for me to sit here and say this is what AI is going to look like and all that, I'm lying to myself and I'm lying to you because I have
Hmm.
no idea. I personally think that nobody, I mean, have I read stuff? Sure. I read
Yeah.
the Kurzweil book, which I think is great and interesting. I find the subject very interesting. But what it's going to look like, I think anybody who tells you they know what it's going to look like is lying
Hmm.
because I don't see how there's any way. The variance of outcomes is so wide here, right? I don't think there's any way to know. All right. I
Hmm.
don't think there's any way to ever know the future ever anyway, right? But in this particular future, the variance is very wide. Can I get my arms around that this is going to change the world and create the greatest productivity boom that the world has ever seen? Sure. I can get my arms around that. Why the hell not? You
Hmm.
know? And that's the one I've been believing because that's the one I have to believe because the market's been going up. So, I listen to the market more than anything, right? I think the
Right.
market will tell you. Can I sit here and believe that the whole thing is a Ponzi scheme, scam, and this, that, and that they, even at this point, if it's not a Ponzi scheme scam, maybe it's overvalued. Maybe they are making investments at this point based on their ego. It's almost like the Easter Island thing, right? Where these people have said that they will invest their last dollar to make sure that they don't fall behind in this stuff, right? Does that start to maybe get a little bit dangerous and maybe they're over investing because of that and maybe the return on investment is not going to be there for them? I can
Hmm.
get my arms around that idea too. You know,
Hmm.
which one is it? I have no idea because I barely know how to spell AI. Okay, so I'm not the guy that's going to tell you what this is going to look like. Um, I'd rather let the market tell me than
Yeah.
than me tell the market, as I am with everything, and that includes AI. So I don't know. I
Hmm.
just watch for how the market is reacting.
Hmm.
Do I think that from a sentiment point of view, people are too bullish AI? No, because we hear just as many people saying that this is a bubble than we do people saying that this, right? So I can't say that they're necessarily too bullish. I don't think that they're as bearish as they were,
Hmm.
when Nvidia first started taking off and everybody on the planet was fading it because it had gone up too far too fast, and the stock just kept going up in their face.
Hmm.
I don't think we're at that point anymore either, right?
Hmm.
Um, so I think that we're somewhere in between those two things, which is why the market is now sort of flailing back and forth, right?
Hmm.
Because I think we have gotten out of the people who are too bearish area, but I don't think that the people are too bullish either. So therefore, we get this kind of movement, right?
Yeah.
And we've seen, you look at Nvidia. Okay, Nvidia hasn't come down that much. Some of these stocks, some of the big stocks, Google certainly is on new highs, but some of the secondary names um, have gone down a lot, 30, 40, 50, 60%, right? So you're getting a shakeout in this area now.
Yeah,
Um,
Oklo down 50, 56%, something like
right,
that.
stuff like that.
Um,
So
yeah.
you're getting shakeout, and that's fine because if you're trading the market, then whatever
Hmm.
takes you out, and when it looks better, you get in. It's all fine. So my point being, I ain't the one that's going to tell you what AI is going to look like.
Hmm.
Um,
Do you think there's been a little bit of this? I don't know. I keep on hearing the kind of buy on the dip mentality uh,
yes.
coming on a little bit stronger, and it just the fact that I started in the late 90s and I just remember that, the buy on the dip was the be all end all advice from analysts, and it worked great for Yahoo and Cisco until it didn't, right? Then buying on the dip was an absolute disaster after March of 2000. Um, do you think that buy on the dip mentality is becoming a little bit too ingrained in people?
I think it may be. It may
Hmm.
be, yeah. Um, in particular, after the March thing,
Hmm.
I don't think that there were very many people saying buy the dip in March.
Hmm.
And now I feel like there are a lot more people saying it.
Hmm.
Does that mean that we just hit the all-time high or whatever? Probably not. But is it possible? It's possible.
Hmm.
It was clear to me that, and not just clear to me, we all knew, we all saw that everyone was calling this the most hated bull market anyone's ever seen, right? That was evident in the positioning stuff where people were staying short during this whole ride up, right?
Hmm.
Which, quite frankly, they now got out of those massive shorts. Um, and now the question is, are they actually going to buy the dip?
Right.
Because I don't think they were ever going to chase the highs to get super
Hmm.
long, right? The people that refused to get long, it felt like were never going to get long. They were never going to chase because nobody wanted to be that person, the bad
Hmm.
holder, right?
Hmm.
So it felt like the only way they were going to chase was if they actually had a dip that they could buy.
Hmm.
Now we've gotten a little bit of a dip.
Hmm.
Are they going to buy it? We're going to find out. It's going to be late because the COT data is not coming out on time yet,
Yeah.
unfortunately. But how does it feel to me? It feels to me like they are buying the dip. Like you said, we're hearing quite a bit about that, right?
Hmm.
There doesn't seem to be a lot of fear in this. Um, so I'm a little fearful, but the dip was small and it's rebounding very nicely now. So you're not going to fade that either. But clearly, at the time when the market does top, it will be because they bought the dip. Too
Hmm.
much of the dip, and then now they're all in, and the position will show that they're too long now, and then it
Uh-huh.
probably goes the other way. But
Yeah.
we have to wait and see. I don't. I try not to speculate on what the positioning is going to be. I just go with what the data says.
Yeah. No, absolutely. And one of the other things that you've been very keen on lately is kind of making, well, I guess you always are. Liquidity is always an issue. You always have to kind of understand, the liquidity side of things. But how is that becoming one of the major narratives for you? And I know one of the things that a lot of people were pointing to was cryptocurrency. I mean, there was, first it was kind of all the junky cryptocurrency, the meme coins that really kind of got jostled quite a bit. But now both Bitcoin and Ethereum have really come off hard. What does that say about kind of like liquidity and how money gets moving, I guess.
No, I think that it was a great signal for liquidity because cryptocurrency, for the most part, is nothing but liquidity, right? You can say that there's other things that Bitcoin may do in the future, Ethereum may do in the future, but I'm not talking about the blockchain. I'm just talking about the coins, right?
Hmm.
Certainly, fart coin and all these other things that are never going to have any kind of value, right? It was all liquidity, right? It's
Hmm.
all speculation. You can say Bitcoin is not that, that Bitcoin is going to have intrinsic value and real value. Okay, I'm not, again, I don't know enough about it to argue with you. Okay, I'm fine if that's what you think and that might be what it is. Okay, good. Clearly, these other ones are not. So that was all liquidity. So when that started to fail, it gives you a hint that liquidity is drying up,
Hmm.
right? Um, which is important because it's very difficult to know when liquidity is drying up. You get the data, money supply or whatever, right? And you see, okay, Japan is $120 billion of stimulus, and China stimulus, and the US cutting rates, and stimulus, stimulus, stimulus. We hear all that, and we know that that is liquidity,
Hmm.
but we don't see the turnover, you know. So, and that when you calculate what liquidity is, that's really the most important part of the calculation, right? Is the velocity of the money supply, and we don't know that. And we don't know until after the fact. You know,
Hmm.
velocity is an after the fact calculation, right? Okay, this was money supply, this was GDP. Okay, let's back into what the velocity was, right? We don't know until after.
Hmm.
So how can we make a decision on that? Well, for me, again, the market to me is the all-knowing one. Um, what are the things that the market is saying about liquidity? So when, yes, first the crappy coins started to fail, and then Ethereum, and by the way, right at the high of Ethereum, we saw the COT in Ethereum show the largest speculator long positioning ever. Okay, right at the top.
Hmm.
Call that what you want. I'm sure it was just a coincidence, but
Right.
and you can remember why it was, right? All of a sudden, everybody started to pile into Ethereum back then because of different reasons that they were all coming up with, and Tom Lee and the whole thing, right?
Hmm.
And people got super, super long, and ever since then, it's sold off a lot. But that was an indication that liquidity maybe was not in a great position. And liquidity is extremely important. And obviously, because money is what is going to push the price of assets up, and lack of money is what's going to push the price of assets down, right?
Hmm.
It's really that simple at the end of the day, right?
Right.
Um, what assets and all that is a different story, right? But in general, more money in the system is going to create assets going up, and less money in the system is going to create assets to go down. Now, I'm not the only one who knows this. You know,
Hmm.
the people that make these decisions know it very well and proved it very well in the great financial crisis, right? What saved us from that whole thing was they provided a boatload of liquidity until it was
Right.
saved,
Hmm.
and they know that now. So this is the hard part of where we come into this, because if we do run into some sort of problem, what are they going to do? They're just going to create liquidity again. So
Hmm.
it's almost like, so how can things ever go down,
Hmm.
right?
Yeah.
If we know that if they go down, they're just going to create liquidity and push you back up anyway. So
Hmm.
why would they ever go down, right?
Hmm.
I guess it could go down, but then they just print it up, and they push it back up. So why would you ever be short in that world?
Yeah. Well,
That's
even with COVID, when COVID happened, I mean, that was,
same thing.
a
They
huge
know
amount of
that.
liquidity.
This is what they do now.
Right.
It's their drug.
Yeah.
Okay, they know it. So why would you ever be short anything if that's the case? Well, that's dangerous statement number one. Okay. Um, as soon as you think there's no way to ever be short anything, obviously that's when we're in danger, possibly.
Hmm.
So that's statement number one. Number two is, to me, and I don't like to be a bear
Hmm.
because over time it's just such a horrible trade. But if I'm going to look for the bearish case, and I have talked about this for years, to me, what it's going to eventually look like, if it ever does happen, is things come down. They feel the need to create more liquidity, and
Hmm.
they do, and that doesn't work.
Yeah.
Then what? Then what? That's, to me, the end of the world trade,
Yeah.
right? Is it going to happen? I don't know. I feel like at some point there's a limit to how much. There's a limit to everything in the world. Physics
Right.
will teach us,
Mm.
including how much money the U.S. government can print before the world says we don't want them anymore, right? I don't know what that number is. I don't know if that's even close. I don't even know if it's 100 years close. I don't know, right? But the theory being there is some number where they've done it too much.
Hmm.
And if and when that happens, the market will let us know.
Hmm.
They'll print up money to try and save whatever they're trying to save. and the markets will reject it.
Hmm.
And then we will be in trouble.
Hmm.
When is that? I don't know. I watch every day for signs of that, right? I think it's going to have to be, unfortunately, as I usually pick tops, but unfortunately, it's going to have to be like the markets come down, they print to try and save it, and then it doesn't work and we make new lows
Another
despite
leg.
everything.
Yeah. Hmm.
That will be the problem. When
Hmm.
is that? I wish I knew. Or if it even happens in our lifetime, I wish I knew. But
Hmm.
I don't have to know because the market's going to show me.
Hmm. Well, and if that's the case, what's your game plan? So it's something that you're aware of could happen. What's your game plan if that does happen?
Hmm, I get short. I mean,
Hmm.
if I'm seeing that, and that's what we were talking about before. If they do this huge dip buy, right? And now I'm seeing that everyone bought the dip and everybody's super long, and it keeps dipping, and then they come in and they try and create liquidity to save it, and the market fails on that. There's your news failure.
Hmm.
Everyone's long, news failure. I get short. I mean,
Hmm.
it's just that simple,
Yeah.
Um, again, am I predicting that's going to happen? I don't really predict because I don't know what the future is going to look like. I just know what to look out for
Hmm.
to be ready to act in case these things do happen.
Yeah. And this gets back to kind of the original thought here is you don't predict, you wait. You say, okay, this is something that could happen. Let me wait for it to either happen this way or this way, and then you take your action. Speaking of which, a lot
And I
of
think that's important no matter how you
yeah,
trade,
yeah,
right?
right. Hmm.
You can come up with whatever theory you want. I don't
Hmm.
care what it is. Bitcoin's going to 1 million. Bitcoin's going to zero. It's a scam. I don't care which side you're on.
Hmm.
But before you act, let the market confirm it for you,
Yeah.
right? Um, that's the most important thing I know, quite
Hmm.
frankly. Don't fight the tape, you know? Don't
Hmm.
fight the tape. And if you think Bitcoin is going to zero and you want to short it, okay, then wait for and it did start to act like crap the last
Yeah.
2 weeks, so you could short it, but you don't have to be long it. If it goes through new highs, then don't be short it because it's clearly telling you you're wrong that it's going to zero. You don't have to be long because you hate it, you don't believe in it. Well, okay, so don't be long, but you don't have to be short just because you're not long, right?
Hmm.
It's one thing to not make money on something. It's a worse thing to lose money on something, right?
Hmm.
I always say be wrong, make money, but at the very worst, be wrong, don't lose money
Hmm.
is good, right? We want to maximize what we make when we're right, and we want to minimize what we lose when we're wrong. So not fighting the tape is the key to that.
Yeah. So on another, besides not fighting the tape, a lot of people also talk about not fighting the Fed, and of course, the liquidity issues. As you mentioned, stimulus in other countries, rate cutting here. A lot of eyes on the December 10th meeting. For a while there, it was like, okay, again, shut down, a lack of data, a lot of questions how a data dependent Fed will react on December 10th. But what is that kind of element there of the Fed and their actions? Last Fed meeting, there was actually two dissents. One thought that a bigger cut needed to happen, and one thought that standing pat was what should have happened. There's been a lot of volatility, it feels like, with the Fed futures and what people think is going to happen. How are you approaching the Fed meeting?
Between me and you, I don't really care.
Mm-hmm.
Because I'm not a macro analyst that trades based on my macro view.
Mm-hmm.
Doesn't mean I don't have a view. I love macroeconomics. I find it very interesting. And what I would say is, does it really matter what they do in December? Because we know what the Trump administration wants them to do, right? Which is to
Mm-hmm.
aggressively cut rates. And we know that come whatever it is, April, May, that there's going to be a new Fed chair coming in, and we maybe don't know, but we can be semi assured that the person that's going to be nominated to be that Fed chair is going to be someone that's on the let's cut rate team, right?
Mm-hmm.
Because Donald Trump does not bring people on to do what he doesn't want. He brings people on to do what he wants, right?
Mm-hmm.
So whether they cut in December or they don't cut in December Does it really matter? Because they'll be cutting anyway,
Hmm.
whenever it is, whenever these people come in. The less they cut now, the more they're going to cut then, would be my guess, right? So what's the difference? If the market's looking forward, which the market does, right? What's the difference? I think this whole thing of the market's come down because the rate cut chances went down for a little bit there. Okay, I mean those things were happening together, certainly, and they're bouncing back together as well, right? The chances of a December cut now are going up, and the stock market's going back up. So we can
Hmm.
argue that yes, that has been happening together. Um, in my view, the reason the market came down was people just got too excited. They were too bearish in September and October because they thought that was going to be horrible seasonality. They
Yeah.
wanted to dip in September and October that they could buy for the great seasonality the last part of the year. They never got that dip. September and October ripped. They 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 capitulated, which we did see in the COT report. They ended up getting long to front run now the end of year rally, and that fell in their face because they got too long, right? That's how I see it. Um, anyway, so I think that was more about what this last dip was about, right?
Hmm.
Um, uh,
Well, and,
from
and
from my
certainly,
window.
certainly we've seen again in conjunction with this latest buy the dip, the move higher. The 10-year Treasury has been coming in, and the Russell 2000 has started really jumping in a big way. So, give us your thoughts on. I mean, of course, the Russell is more. The small cap companies are more sensitive to interest rates, and this has been a big move. I mean, whereas a lot of the indexes were still kind of hovering, in this range of last Thursday. Now we have the Russell 2000 with another, three back-to-back really large gains here. What's your take on this?
No question about it. Um, like you said, the Russell and the Dow really are more sensitive to interest rates than certainly the Nasdaq is, right?
Hmm.
What is the Nasdaq's led by companies that are, growing at whatever it is, 100% a week, and have margins, 75% margins, and all that. Does it make a
Sitting on
difference?
piles of cash.
Right? Does it make a difference to them if interest rates are 4.25 or 4.35 or 4.45? Like, does that
Yeah.
really make a difference to companies that are growing at that kind of rate? I
Hmm.
don't think so, right? So the market's done, in my view, what it should do based on that. So the rate expectations have now gone up that they're going to cut rates, and so the Russell and the Dow have been the biggest beneficiaries of that. That makes sense to me. From a positioning point of view, we have seen in the COT that people are very long the Nasdaq at this point, and they are not long the Dow or the Russell. So I would expect those to outperform, and that's what's been going on from a positioning point of view as well. From a tape point of view, the Nasdaq really started to underperform on the Palantir earnings. It failed on Palantir earnings, and ever since then, the Nasdaq has underperformed.
Hmm.
And then it re upped that underperformance on the Nvidia earnings. So all of these things have been, the market has been telling us these things, right? It's not that big of a surprise because the tape has been saying exactly these things. Um, so if you're following the tape and you're following that whole thing, then you've seen this. It's been pretty clear, honestly. Doesn't
Hmm.
mean that it's been easy to trade or anything because it's never easy to trade, right? But watching it and paying attention to these things has been pretty clear that this is what's been going on. So
Hmm.
it
Yeah.
makes sense to me. It makes sense, right?
Mhm.
The
Well, and
things that are interest rate sensitive are the things that are doing best as interest rates are coming back down. Okay.
mhm. And as you mentioned, I mean that Nvidia, earnings report, uh, it looked so good, and everything was rosy until it reversed and brought the whole market down with it, and and Nvidia is still lower than it was that day.
Oh, and
Um,
Palantir too. Don't forget
yeah,
Palantir
yeah,
was
yeah. No,
was,
absolutely.
was an
It
incredible.
was just earlier
Yeah.
uh, on that.
Right.
So with with this earnings season, I mean, there still does feel like there's a lot of these huge gains, and yeah, well, it's either one way or the other, right? You get these huge gains, or these devastating losses that just kind of continue. But it certainly seems medical has been one of the areas that's been a lot stronger lately. Is that something that you're following at all?
Because I'm more of a futures trader than a stock trader, it's not something I pay huge attention to, but certainly healthcare I know has been doing a lot better.
Hmm.
But that's a pretty typical thing, you know what I mean? Healthcare tends to be more defensive, right? And so when the market comes off, they get out of their Oklos and their whatevers, all these stocks that have kind of gotten smashed, and they get into that type of stuff, right?
Hmm. Yeah.
I think that's pretty typical, right?
Hmm.
Seen that a thousand times before. Um, so I don't see any big surprises there. I like to look for opportunity. I'm looking because I believe that the market is a difficult place to make money. Because I think that you have to look for the tells. You have to count cards if you want to do this, and look for the tells. I'm always looking for the tell. You
Hmm.
know, so high flying tech stocks going down and the money going into healthcare stocks and they go up. That's no tell to me. That's just sort of like, okay, that's usually what happens. It doesn't
Right.
really tell me anything, right? I'm looking for the tell, which to me means when something shouldn't happen, but it does.
Hmm.
Then what? You know?
Hmm.
Then what? Then that's when there's some valuable information to me.
Hmm.
Otherwise, you're just kind of playing the randomness. If I think that the tech stocks are going to go up, okay, I'll buy the healthcare stocks. Okay, tech stocks go down, healthcare goes up. Okay, great. But trying to get that right, that randomness right over time is going to be very, very difficult, right? So I'm kind of really looking for the tell.
Hmm. And are you, speaking of tells, again, you're kind of flying blind a little bit right now without data, but you did mention two areas that you were looking at, or the yen and coffee. So, what is it that you're looking for with those particular trades in terms of setups?
The end's a tough one. Um, the positioning is somewhat favorable at this point for the yen to turn around. Um, the yen has been news failing the other way. As the interest rates in the yen have been going up the last few weeks, the yen has actually been going down.
Hmm.
Um, so that alone, I think, is kind of interesting. It's turning a little bit now. I think that the yen is interesting, and I did a video this weekend that's on YouTube, but where I talk a lot about this. But a lot of people are saying that the whole yen carry trade is what's going to blow everything up. And that's like, when the yen goes up, that's the yen carry trading theoretically unwinding.
Hmm.
But what's been happening is the yen's been going down and stocks have been going down. So I don't know what people are talking about. And now the yen has been going up for the last few days and the stocks have been going up. So it just goes to, I think it's interesting to watch just to see that the narratives can be absolutely bullcrap, you know,
Hmm.
especially when everybody's talking about them, you know. Everybody wants to point to what happened last summer in the yen, when Japan first announced that they were looking to raise interest rates for the first time in a long time, and the yen went up a lot, and it
Hmm.
scared the stock market for a few weeks, right?
Yeah.
But nobody was looking for it then. And in fact, if you look at the commitments to traders data from then, you had massive shorts in the yen then. So the fact that it squeezed higher was not a big surprise because it had a lot to squeeze because there were a lot of people short. This time you don't have that, so I don't think it's going to be the same thing, and it clearly hasn't been the same thing. Um, so that's what's interesting in the yen. The coffee thing, and no one really is going to care so much about coffee, and that's fine, but I think it's important just from the point of view of they wanted to bring the price of coffee down recently, right? Because everyone's been talking about affordability has become the big political hot spot, right? And coffee was one of the things that was going up a lot. Groceries, food, coffee, and they came out and they announced that they were going to do away with the tariffs on all coffee.
Hmm.
And when they said that, coffee went down a lot, but it came right back up, right? And it's actually higher now than it was 3 days ago when they made that announcement.
Hmm.
So it goes back to what I was saying about like the whole intervention or the whole creating liquidity. What happens? when you're trying to do something and the market rejects it, what's next, right? Where you left, you know? And that's, I think, what's interesting about coffee here, whether you trade it or not, is watching that because that's exactly what we got going on here. They're doing whatever they can do to get the price of coffee down,
Mm-hmm.
and yet the price of coffee is not going down.
Mm-hmm. Right.
So what's next? What you gonna do? As they used to say back in the old days, where you left, right?
Mm-hmm.
If you sell 1,000 S&Ps, the market just sucks it up, and it's like, okay, where you left? You know, what do you got now, right?
Mm-hmm.
Because now you're gonna have to cover those 1,000 S&Ps because you didn't move the market at all by doing that, right? So the market
Mm-hmm.
is saying it just absorbed it, right? Well, coffee just absorbed that news. So what's gonna make it go down now? I
Mm-hmm.
don't know, right? So I think it's just interesting to watch, if nothing else, to see that phenomenon in action
Yeah.
because I think that that phenomenon is susceptible across a lot of these markets now because we are seeing that the administration is very interested in getting markets to where they want to get them.
Mm-hmm.
They really want markets to go more than most administrations, I think. They are very interested in markets going where they want them to go. And if you believe in free markets, then you believe at a certain point nobody can manipulate them. And the people that are stuck manipulating them have a possibility of just getting destroyed. It's like when the Hunt brothers tried to corner the silver market. Well, it
Mm-hmm.
worked for a while, and then when it didn't work, they went bankrupt.
Right. Uh,
So I think it's interesting to watch that because we have a lot of markets that they're doing that with. They're doing that with soybeans, right? They want to get the price of soybeans up to help the farmers, which they've been successful in doing. Okay. Um, so I just think that coffee is a good thing right now because we're lifetime watching what it could look like for their what they want to not work. So we can
mm-hmm.
get a view as to what that looks like. That's the main thing I think about the coffee market right here.
Yeah. And
Almost
this.
the same, you know. I'm not saying most people aren't going to trade coffee. They're not comfortable trading coffee, and that's fine.
Mhm.
I'm just saying this is a good thing to watch.
Well, and I think it's instructive of your style. Again, I highly recommend folks get the Market Wizards book and read Jason Shapiro's chapter. Look at your YouTube videos. Where can people find more information to kind of follow what you do? Because
I
again, I
mean,
always find it interesting.
crowdedmarketreport.com is our homepage.
Crowdedmarketreport.com
And that'll
is.
point you to our
Mhm,
YouTube channel or our
mhm,
Twitter thing. And Twitter's not the greatest place because I'm not that active really there, but I
mhm.
do put some things on there. But YouTube is really the main thing because I put free videos on there every week. I talk about some subject, and during the week I put closing comments and all that. That's really the place to go if you are at all interested in what I'm thinking, or if you
Mhm.
care at all about what I'm thinking, that would really be the place to go.
Well, and again, it's not every week is going to have a setup, but when they happen, they can be magic. So, highly recommend watching those because I think you've got some great stuff, Jason. Really
And
appreciate
the
you.
truth is, what I'm trying to do with this whole thing is not necessarily try to convince everybody, hey, trade like me, because my way
Right.
is the only way to trade. In fact,
Hmm.
it's the opposite.
Hmm.
I'm like, I don't think you should trade like me because you're not me, just like I shouldn't trade like you because I'm not you. But the lessons, you know, and the theories behind this stuff, like don't fight the tape, for
Hmm.
example, right? That's valid. Wait for market confirmation before you do anything, right?
Hmm.
That's valid no matter how you trade.
Yeah.
And those are the things that I continually push and I continually try to give examples of. Like, hey, here's what it looked like when you were trying to fight the tape here. Hey, I
Hmm.
get it. I get it. You're bearish stocks. You hate Donald Trump. You hate this. You hate that. You hate the other thing. I get it. I'm all with you. I'm with you. I agree with you. Okay. But the market is saying no, so don't do it. I try to show examples like that to try and pound these ideas into people's head, not through, hey, Jason Shapiro says so, therefore it's true because he was in some book, right?
Uh,
It's more like the market is showing you that these things are. There's a reason why Jason Shapiro says these things, right?
hmm.
And it's because this is what the market has taught me, right?
Yeah.
I'm not trying to teach the market anything. The market teaches me, right?
Yeah.
And I'm just trying to pass along that general kind of thing to people because I think it will help them.
Yeah. No, absolutely. I often will tell people, look, some of this stuff isn't my opinion. This is the market's opinion. You just gotta know how to read it, right, and understand, what
Exactly.
it's saying. So,
Exactly.
but Jason, I really appreciate you coming on the show again. Again, crowdedmarketreport.com is where folks can get more information on that. And then also, as you mentioned, you are on X, and that is at crowded underscore MKT underscore RPT. That's where you can find Jason's stuff. And again, the homepage is the best place to go. But thanks again for being on, Jason. Really appreciate it.
Thanks for having me. It's always great talking to you.
Absolutely. That's going to wrap it up for us this week. I hope everyone has a great Thanksgiving. I'm going to be off in Kauai myself, so that was another reason we wanted to do this a little bit early, so I can get on the road, as it were. And next week we're going to be back at our regular time on Wednesday, live at 5 p.m. Eastern time as typical. And we're going to have Simon Erickson back on the show. He does a lot of great fundamental analysis, and he, of course, is the founder and CEO of Seven Investing. So haven't had him on for a while, so it'll be good to get his thoughts and get some of those fundamental details that he does so great at covering. So hope you join us for that. Have a happy Thanksgiving, everyone, and we'll see you next time. Take care.